Hey everyone, welcome into another episode of the Financially Free Investor Podcast. Hey, so today I actually thought it'd be kind of fun to share with you a quick little coaching call I had with a few of our clients or students. So anyways, why don't you tune in and take a listen. We were talking about, and it may not make sense if you're just listening, but just talking about how to find cash flow in today's market. And we went over some interesting things. We do coach a selective group of individuals on investing in real estate, and we're going to have applications opening up soon if that's something you're interested in or someone you know might be interested. So more to come on that, but for now, let's listen in.
Welcome to another episode of The Financially Free Investor, where you will learn information and strategies on how to become financially independent by investing in real estate, something that is not taught openly in our society today. Financial freedom matters so you can live a bigger life, retire early, and do what matters most to you. Get ready to hear tried and true methods to becoming financially free with your host, Jordy Clark.
Let's have you guys go around and share one thing that you've done in the last week to move your real estate investing forward. I'll go ahead and start. I joined a data service called PropStream that allows me to research a bunch of properties and get in touch with their owners maybe a little bit better. And depending on where this goes, we might jump into it and take a look at it, and I can show you guys around. But yeah, so that's one thing I did in the last week. Murray, how about you go next?
Awesome. I have been negotiating a seller finance deal. Hopefully going to be getting that one figured out and dialed in this weekend to add another property to my portfolio. So,
Hunter, what about you?
I put together basically like a marketing campaign for some condos that my wife Jackie and I used to live in. Just kind of like some little gifts for all the people that live there. There's like 125 units. So I'll be going through next week. I'm just putting everything together, but I'll be going through next week and knocking. Could we do some possible deals for me personally or for clients or listings? So
cool. Jonathan, what about you, buddy?
So for me, I have been pretty preoccupied lately, but I think it'll benefit myself long term. I'm in the process of purchasing a company, and it's an HOA management company. So in doing so, I'm going to have basically a list of homes that are delinquent, at least in HOA assessments. And usually, most times, 9 times out of 10, if they're delinquent on assessments, they're usually delinquent on other things such as, home mortgage and stuff like that. So strapped for cash right now because I'm buying the company, but soon enough I'll be cash flowing pretty well and able to buy more properties.
Cool. Let's jump into this PropStream I was talking about. Actually goes in with what you were talking about, Jonathan. Our topic today was how to find cash flow in today's market. And we're at an interesting place in the market where for the past, we'll call it 2019 to 2022, we saw a season of very, very low interest rates, especially post-COVID. I mean, a lot of people refinanced their mortgage rates down into the 3s, some into the 2s. In fact, I know of a few clients of ours personally who, they've got mortgages at 1.87, right? And there's a lot of people that they look at that payment and it's so affordable for them. And people buy houses on payments. Most people buy houses on payments. So, if you're sitting there at an $1,800 mortgage for, call it a 3,000 square foot house, because you're at a 2% interest rate. Well, if you want to go and move up into a 4,000 square foot house, at a 7% interest rate or a 6% interest rate, you're going to double or triple your payment. So what we're seeing in the market right now is kind of this stagnation where a lot of people don't want to move. A lot of people don't want to give up those interest rates, primarily because of the payment. And so the thing that's going to make people move right now is motivation. So they're going to have to be motivated in one way or another. And if you can see on my screen here, all of these people, I just did Utah County here in Utah, and just kind of a little radius search. And all of these people are in pre-foreclosure, which means a notice of default has been filed. They are more than 90 days delinquent on their home. Okay. And so we can go in and we can research with this service. And, there's other ones out there not endorsing just this service, but we can go in and we can see like, hey, these people right here, they all had their house on the market in 2022 and it failed to sell. And they're in foreclosure, right? So does that scream opportunity to anyone else but me? Right? Like those are the motivated people so they're either going to have to catch their mortgage up, or they're going to choose to get foreclosed on, or they're going to have to sell, right? Those are their three options. When you're in default, those are your three options. So there's a bunch on here. Like you can even see, what's contingent, meaning, hey, these people listed and they're now under contract. So they're, hopefully going to fix their issue of being delinquent by selling, and then they're going to go rent somewhere. Right. But there's a lot of these people who, like these people in Saratoga Springs bought in December of 2021. And it looks like they paid $518. And the total assessed value, this is vacant land. Maybe not the greatest example, but like you kind of get the gist, right? You can see these people right above them in Provo. Looks like the estimated value is 423 and they owe 467. So not only are they delinquent, they're now upside down. And that's the kind of buyer I want to look for if I'm looking for cash flow in today's market, for multiple reasons. One is I can probably assume their mortgage at 3 or 4%, or do a subject to or seller finance. It's all kind of the same thing. Assuming you'd have to qualify. Seller finance, there's ways of doing that so you don't have to qualify, but you would have to catch them up, which this happened a lot in 2008, 9, 10, is people would go into foreclosure. And it's weird. Some people like figure out a way to get out of it, but then other people, they don't want to be embarrassed. And so they literally stick their head in the sand and they'll get foreclosed on. And they live somewhere for free for a few months, but like if you got laid off 2 months ago and you've burned through all your savings, the probability that you're going to be able to come up with $20,000 or $30,000 in back payments or whatever it is pretty low, right? But me being an investor, I'm going to be able to go to them and say, hey, what if I caught you up and took over your mortgage payment so that you continue to build credit? Because the longer you make payments on any trade line, the better your credit gets and the stronger your credit score is. So rather than being foreclosed on or, being put in a short sale situation where the bank has to take less than what they're owed, because that's going to affect your credit negatively as well. What if we figured out a seller financing option where I can basically take over your payments? I make them. We'll put a renter in here. I'll get you caught up, do whatever we need to do. And then, in 3, 4, 5, 10 years, whatever time span you can agree on, we'll get that refinanced and get out of your name so that you can go buy another house, right? If the time is right for you. So this is probably the best way that we're going to be able to find cash flowing deals in this market, considering 80% of mortgages out there are under 4% interest. Like people are just, I think we're going to see this could go on for a few years where a lot of people just don't move. Do they want to move? Yeah. Are they going to? No, because they're not going to triple their payment to get, just slightly more house, unless there's a really good reason why they're being pushed into it, right? Like, so divorce, death, you get remarried, you have a kid or 2 or 3 or 4, outgrow your house some way, then that stuff, like that's always happened. That will always happen. And that will always be a trigger for people to move. But if we can find people like this that are motivated financially because of a foreclosure, it can be a great way to find deals in the market that cash flow. So with that being said, I'd love to get some feedback, some thoughts, questions, and make this a little bit more interactive since it's a little bit more intimate of a phone call.
So the interesting thing is, I forget which one it was that said that they are buying, or at least looking to buy, in their old condo complex. That's kind of what my wife and I did. We have 2 condos now. We never lived there, but we're trying to buy up more in that area just because we know, the condos are lower in value, but are very close to a lot of good areas and just need some cleanup, and then suddenly their value goes up. And what's been interesting is a lot of people within that community are on fixed income. And while I hate to, move somebody out of somewhere, the fixed income people, when they're in a community such as this one that is low on the reserve for their HOA, meaning, anything less than 50% is kind of dangerously low, I would say. And so this community is probably 20% funded. And because of that, they're hiking up the HOA fees, and I can cover those on my side because, I'll just increase rent a little bit over time. But those that are living there full time and are on fixed incomes, it's pricing them out. And so just to be there and available and be the first person they think of when, suddenly they're like, gosh, I've got to get out of here and find something more affordable, then it's, you can get that sale before it even goes to market, which is what we're trying to do.
Yeah, that's great. I love it. Great strategy. Murray, you looked like you were going to say something.
Yeah, I was going to have you go in, for people who don't know, how are you approaching, like, this prop stream is great, but how are you approaching the sellers? Can you go into like how you're contacting them? Are you farming them with mail, skip trace calling them, door knocking? Can you go into more detail about that, just for people who are not as experienced as you and I?
Yeah, no, great question. So, I'm going to use this as a filter first off, right? And I'm going to filter out this Centennial Boulevard that looks like it's land that was paid cash. So I'm not exactly sure why it's showing up on this pre-foreclosure. So I'm going to filter that out, but then like these properties, I'm not going to target every single one of them, right? I'm only going to target the ones that I have an interest in that I think will cash flow. Like this one in Linden, the mortgage balance is 1.4 million. Well, I'm probably not going to cash flow on something that's I have to owe 1.4 million on, unless it happens to be like a multifamily of some sort, right? So I'm going to pull this open, and yeah, look, it's a 13,000 square foot house. I probably have no interest in trying to figure out how to buy this, right? But if I was interested in this, we can look at the mailing address of whoever owns this, and it looks like it's a holding company, and then we can mail to them. So we'll have a letter that we'll potentially send out that says, hey, this notice of default, like this is what it means. We would like to help you in one way or another. We're investors, and we'd be interested in purchasing your home. And then I'd throw a business card or whatever in there, and I'd send them some mail. I'd probably set it up on some sort of a system where I'm mailing them once a week. And they're probably getting a lot of mail, especially if they're in foreclosure. They know they're in foreclosure. And you want to try to get them on the right day where they feel like, hey, I think it's probably time I do something, right? So we'll send them postcards, letters, handwritten letters, just different things to try to get them to respond. I'll have a phone number set up that's dedicated just for them to call in, so that I know, hey, when someone calls this phone, then, we do this for our real estate team. We've got a phone that we carry that when people call the sign, the number that's on the sign, it goes to that phone. So when that phone rings, whoever's got it that day knows, hey, someone's in front of a house right now and they're looking at this house to buy it. And so, it filters it really quickly versus like some random number. So I'd probably have another phone set up just for those inbound phone calls. But then I would also want to be proactive, and you can do what's called skip tracing. This program allows you to do that. And what you can do is you can figure out that owner's phone number, right? So once I've kind of done some more research and spent some time figuring out, hey, do I really want this property right here in Payson or whatnot? Then you can go in and skip trace, and you can call them and just have a simple script like, hey, my name is Murray Clark. I'm looking to buy houses in your area. And, your house is one that would be interesting to me to buy. I'm a cash buyer. Let me know if you'd ever be interested in selling. And when they don't pick up, you just leave that voicemail. You can also text them once you have the phone number. You're probably going to get some people that are like, hey, take a hike. Like, I'm not selling, and that's fine. But again, the only way to cash flow in today's market is to find a motivated seller, because someone who's not motivated, they're just not going to sell, especially if they have an interest rate on that property at 3 or 4%. So you got to find the people who they're ready, willing, and able to sell. So does that kind of answer your question?
Yeah. And I also wanted to go in, you can pay VAs, a virtual assistant. So you can skip trace in bulk, and you can pay a virtual assistant $5, $6, $7 an hour to text them. I have a buddy who's a wholesaler out in Fresno, California, and he's seen a lot of success with that. And that way it kind of narrows down your time a little bit. So you're not the one having to do that, because all they do is get a yes from someone. Because it's a numbers game. If you contact 200 people, chances are one of those 200 will probably say yes. And then you just kind of narrow and filter that down to find more deals. You can also create a map, I think, with this prop stream, and you can go and door knock specific areas and drive for dollars to see if there's anything that's run down that might, like in rougher areas, there's usually neighborhoods that are filled up with crap, and it's lower income, so you can usually find some good deals. So if you door knock in those areas, you can usually find some good deals. It just takes more effort and time doing that as well. But an in-person conversation, when everyone else is sending mail, phone calls, texting, can go a long way, I think.
Cool. Anyone else have questions, comments?
Jordy, you had mentioned, being the cash buyer. And for those of us that, are strapped for cash, do you work with plenty of lenders or, people that are willing to be the cash up front that you can recommend? Or do you say, hey, just look in your local area and I'm sure you'll find them, hard money lenders?
Yeah, I mean, I could probably connect you, just because Arizona's not far from Utah. I can probably connect you with a few hard money lenders. And when most investors say cash, most of the time it's not their own cash. What it means is cash buyer means you don't have to go through the headaches of, making sure the property appraises or it's all fixed up or whatever that most owner occupants are going to want to do. So cash buyer just means you can close quickly. And usually hard money lenders will be able to close quickly.
Also, if you don't have a ton of cash, if you find a good deal and put it out to your local RIAs, your real estate investing associations or real estate groups, I'm sure that there's someone that has an excess of cash that would be willing to partner on a deal where you find it, you manage it, they bring cash, and then they get a return or 50% of the property, or there's a couple different ways you can structure it. But if there's a good deal, there's always someone with cash looking to invest.
Yeah, that's a really good point, Murray. And if you found Like Jonathan, let's say you found, someone like this Spanish Fork property, right? It's south of Provo. You got in touch with them. You figured out, hey, this is what they'd be willing to accept. You put it under contract. You go take some pictures of it, and then, go to a real estate investor association meeting, and you find somebody who's looking to buy a house that month. You can do what's called an assignment of the contract, and you can sell your position in that contract to somebody else for a fee. And that assignment fee can be $5,000, $10,000, $15,000 for you doing just a little bit of legwork like this to find a motivated seller and put a property under contract. So that's a great way of not being cash strapped, right? Is you find the deal, you find a motivated seller, and you get in the middle of them and the end buyer, and you can make, $10,000, $15,000 pretty quick and easy with little to no risk.
Jordy, what are you seeing? Because I will always be interested in buying a Utah, condo or home that I can then Airbnb out. So that way, when I need to go up there, I have somewhere to stay. Are you seeing that market still do pretty well in terms of finding properties specifically for that purpose, or, just what are you seeing in general for that?
That's a good question. I've seen a lot of people, they flooded into the Airbnb game right after COVID because like everyone was traveling, but now we're kind of heading into a recession, and I think people are tightening their belts a little bit, and there's maybe less travel going on than before, or people are just staying at hotels more. I don't know, but I have seen a ton of people getting out of, a lot of investors here locally, at least, they're, transitioning their short-term rental into a midterm or a long-term rental. And I'm not 100% sure like why, other than they've all been posting that they're making way more money as a long-term rental than as a short-term rental, which the funny thing is before they were saying, hey, we're making so much money as a short-term rental that we would never rent this thing long-term. So it's just kind of interesting how things change. I totally understand the game. I would say this is a get rich slow game. It's get rich for sure. It's not get rich quick. And like, if you're going to buy a rental property, I think make it a rental, unless you plan on going there like once a month, or, you want to go spend a month or two of the year out of it. Then I could see like owning something as a short-term rental. But I've sold all my short-term rentals for that reason. Like, we had one down in Moab, and we just felt like, man, if we were traveling anywhere else, it was kind of a waste because we weren't using our place in Moab. But I mean, if you're going somewhere all the time, I think it could make a lot of sense. The tough thing is, I don't know anyone that has been doing short-term rentals for more than a decade that's still like absolutely killing it. If someone were to be doing that, I think it would have to be in very well-defined like geographic markets like Park City or Moab, somewhere that you can't get saturated because the price is so high that there's a big barrier to entry. So that doesn't directly answer your question, other than that's just what I'm seeing.
And yeah, that's all I wanted, because I know it's a tough ask. Yeah, because my thought is maybe a duplex, in the Provo Orem area, or maybe on the other side of the mountain. It just depends, but just a duplex that I can rent out long term, half of it, and then short term the other half, and then just use the other half for whenever I need it.
Yeah, I would look really close, especially with Provo and Orem, into their short-term rental laws, because there's a lot of places like Provo specifically that cracks down on every housing code violation they can. So we're about to run out of time, but hopefully that helps. Thanks for everyone that jumped on, and we're going to try to do these more often to help you get closer to financial freedom. Thank you for joining me for another episode of The Financially Free Investor. If you found value in this episode, or know someone who would find value in this information, please share with them, subscribe, and send us a review.